All right, let's look at short exercise 8-8. This is on page 528 of your text. Here we're going to do some practice preparing a bank reconciliation. All right, so we've got the cash account. We're looking at First On Alert Security Systems. It says the cash account of First On Alert Security Systems reported a balance of $2,470. So this right here, this is our cash account. This is what we have on our books, okay? So this is our book balance at the end of the period. So we're going to come over here and we're going to, and you'll notice too, before I put that on there, our bank reconciliation is going to have a header. Just like any of our other statements, we're going to have our header. We're going to identify what statement we're preparing and for what the period end is, okay? So, or the day that we're preparing this bank reconciliation, which is going to be at the end of the month, okay? So that's when it's for as of December 31st. So for our book side, this is going to be our balance at December 31st, 2015. Okay? And that's going to be what we start with, and it's $2,470. So we're starting with $2,470. Okay. All right. Then it said that at December 31st, 2015, there were outstanding checks totaling $700 and a December 31st deposit in transit of $100. And the bank statement, which came from Park Cities Bank, listed the December 31st balance of $3,700. So this is the balance on our bank statement. So now I'm going to come over here. I want to go ahead and start with my beginning balances on what I know I'm looking at first. So here, this is going to be my balance, December 31st, 2015, for the bank side, okay? So this is going to be my bank side. And it said I'm starting with $3,700. Okay, so now I got my beginning items, and that said included in the bank balance was a collection of $640 on account from Brendan Bayou, a First On Alert customer who pays the bank directly. And the bank statement also shows a $30 service charge and $20 of interest that they earned on the bank balance. So now that we've got what we're starting with, let's go back and look at the first items that we had listed. It said there were outstanding checks totaling $700. Now, if we have outstanding checks, that means that we've written them on our books, but they haven't cleared the bank. So this is going to be something that we're going to subtract on our bank side, okay? And typically we're always going to go on here and we're going to do our additions first, or list anything that we're adding. And then we'll list anything that we're subtracting, okay? So here we're going to have our outstanding checks, and we're going to subtract those. Those are $700, okay? And then it says at December 31 deposit in transit of $100. So remember from the lecture, deposit in transit means that we've made the deposit, but it hasn't cleared the bank yet. So we're going to add that over here to our bank side. So we're going to have a deposit in transit, and it's going to be an addition of $100. All right. And then it says we got our bank statement balance, and then included in the bank balance was a collection of $640 on account from a First Alert customer who pays the bank directly. So this was on the bank statement. So typically anything that's on the bank statement, if we don't have it on our books, it's going to be an adjustment to the books, okay? So this is assuming we don't have it listed on our books, but there was a collection of $640 on account from our customer. So same thing over here. We're going to have our addition section. We're going to have our less section. So over here we're going to have bank collection from a customer. So we're going to add this. So it was $640, and I'm putting it to the left. If you have more than one item, we're going to list them to the left and just put a total over here. Okay. All right. Then it says that the bank showed a $30 service charge. So this is something we have to pay. So it's going to reduce our cash because it's on the bank statement and not on our books yet. So we've got service charge, and it was 30. And then we have $20 of interest revenue. So interest revenue is addition to us, right? So that's money that was added into our account. So we're going to have interest revenue listed here. And it was for $20. So I've got a total addition over here of $660 and a total subtraction, there was only one, of 30. So when I total that up down here, I'm going to get what we call, remember, our adjusted bank, our book balance. So this is our adjusted book balance. This was at December 31st, 2015. Okay. And we'll do the same thing over here. And here it's going to be our adjusted bank balance. And it was at December 31st, 2015. And these should agree. That's the whole point. Okay, they should agree. Okay, and they do. We've got adjusted balance of $3,100. Now that's not the last step. All right. So anytime we do a bank reconciliation, we're going to have to make some journal entries. So this is to make sure that we agree and we can account for the differences. And now we've got our adjusted balance is the same. We're going to do journal entries, but when you're thinking about which journal entries to do, which side we're going to look at, we're only going to look at one side. This is the bank side, right? We can't do anything about the bank's records. We can't make entries to the bank's records, but we can for ours. So we're only going to make journal entries related to the items on our book side of our bank reconciliation, okay? So we're going to move into number 9, where we're going to actually look at this and do the journal entries associated with it, okay? So when we do this, I'm going to just come over here, and I'm going to look at this. I'm going to take this from exercise 9 and bring it over here so we can have it listed. All right, so first off, I'm going to look up here, and I'm going to see what I have that needs to be as additions, okay? You can do it in one large journal entry, a compound entry. You can do multiple ones. So let's just, to make it simple, let's just do individual journal entries. So for that first one, it was a bank collection, right? So our cash is going up, $640. And we collected this the bank collected this from a customer, Brendan Bio, right? And it says, was a collection of $640 on account. Since it was collected on account, we know that it was a collection of accounts receivable. So I'm going to do accounts receivable here and specify what customer, okay? And record it like that, all right? And that was to record account receivable collected by the bank, all right? If we put a description. So also let's do the next one. So the next item here was interest revenue, okay? So interest revenue, it's increasing our cash, $20. And when I debit cash and record this revenue, I'm going to credit interest revenue, okay? And this is to record interest earned on the bank balance. All right, then the last item we have is the service charge here. So different companies are going to record this differently. It could be a debit to service charges. It could be a debit to bank expense. They could put all these bank charges in a miscellaneous account. So that kind of depends on the company, but we'll just write anything we pay the bank off to as a bank expense, okay? So we'll debit that for 30, and remember this is cash going out, so we're going to credit cash and debit the expense or item associated with this, and that's to record bank service charges incurred. All right, so that's how we're going to prepare this bank reconciliation and the journal entries. Now, if you have any questions on this, or having any trouble when you're doing your bank reconciliation, post your questions to the Chapter 8 questions discussion board, or send me an email. And if you're in Pearson, you make use and utilize that Ask My Professor link, because that sends me exactly what you're looking at and I can better help you. All right.